The pandemic gave us all a lot of time to reconsider our lives, our work, our relationships. It also fundamentally changed how we interact with technology and with our surroundings, both the natural environment and the built environment, the buildings that we live and work in. For real estate investors, the pandemic rocked the foundation of the asset class at first. Yet, as our mid-year update reveals, real estate has generally survived intact, and many markets are thriving in novel ways. Finally, the pandemic raised awareness for the possibilities for creating social value. This could be through investment in low-carbon assets or in healthy and diverse communities. The mid-year update for the ISA is a big task that we do every year to look back and review the calls we made last December. And this time, we've reviewed the huge sectoral shifts we first reported on in the Future of series back in December. We revised and updated this analysis with the benefit of the last several months of reopening. We added our forward-looking views for the rest of the year and beyond. We also trace how differently this reopening process has unfolded in each region and each country. Overall, the reemergence of leasing activity, sharp upturn in capital markets, and also a strong sense of optimism of real estate investors have all shown themselves at the midway point here in 2021. Values are reaching new highs in the favored sectors. Transaction activity in out-of-favored sectors is beginning to show reasonable support as long as market occupancy and asset level characteristics have held up. In fact, the biggest challenge for deploying capital is that so much other money is trying to find a home in real estate. It's effectively picking up the plot from the pre-pandemic story. That was when buyers were outnumbering sellers by 3, 4, or 5 to 1. In our final summary of the mid-year status, we look at the asset class perspective, and we look at the question of how real estate performs in a rising inflation or rising interest rate environment. Now, we do this even though inflationary conditions are really far from universal in the markets where LaSalle is most active. We also highlight the importance of real-time data analytics that we've been using to track the reopening process around the world. Last December, we foresaw that surging demand for warehouse and residential space, a record amount of capital that would be unleashed, and an acceleration of investor interest in alternatives once COVID was contained. And all three of these predicted trends have kicked into high gear, especially in countries where vaccine deployment or return to office levels have been high. Nevertheless, just as some people survived the pandemic but continue to experience lingering symptoms, parts of the real estate universe will continue to suffer from long COVID. For every property sector or specific location with robust demand, there's another sector facing serious headwinds or even existential questions. The pandemic accelerated technology trends in virtually every aspect of our lives. Remote working, virtual meetings, telehealth, distance learning, and of course, the deepening of e-commerce. Finally, the pandemic accelerated the adoption of ESG policies. That's environmental, social, and governance policies by investors and occupiers of real estate. This is a move that has many implications for how LaSalle will invest and operate real estate going forward.